A drawdown is a peak to trough decline during a specific period of an investment, trading account, or fund. A drawdown is usually quoted as the percentage between the peak and the subsequent trough. If a trading account has $5,000 in it and the funds drop to $4,000 before moving back above $5,000, then the trading account witnessed a 20% drawdown. The absolute drawdown refers to the sum difference between the initial capital risked and a minimal point below that level. This measures the amount of initial risk involved in the investment. The absolute drawdown shows how big the loss is compared to the initial deposit during the trading. If the absolute drawdown value is 0, for example, this means that no capital was at risk. The maximum drawdown refers to the difference between a local max and the next minimum in your chart. This spread can show you potential profit value locked in the trading pair that you have selected. If the maximum drawdown is higher than the currency's pair profit potential, it might not be an investment that you want to consider. Relative drawdown is the maximal drawdown percentage that shows the ratio between the maximal drawdown and the respective local upper extremums value of equity. Please take a minute and look at a whiteboard for a moment. Let's learn some more stuff.
Hello traders, this is Igor from FX Igor YouTube channel, and right now we are talking about drawdown. So I just want to show you 3 examples of maximum drawdown, absolute drawdown, and relative drawdown. First and the most important thing is maximum and absolute drawdown. Let me see this picture. Here we have a chart and the trader. Trader created several trades in the past, created $6,000 profit in one moment. He started with 10,000 initial deposit, and in one moment he went up to $7,000 below initial deposit and started to earning again. So this is the picture. This is the sum example that I just created for this article and video. And what is the absolute drawdown? As we can see, it's a value that we compare with initial deposit. So if you had a portfolio, started with 10,000 initial deposit, and in one moment you created $3,000 below your initial deposit, your portfolio value is $7,000. We are talking about absolute drawdown, and your absolute drawdown value is $3,000. So I hope that you understand. It's a simple drawdown below your initial deposit. Now we're talking the most important drawdown in trading. It's a maximum drawdown. So what is the maximum drawdown? The definition is very easy. It's the drawdown between the highest high and the lowest low value of your portfolio. So in this example, you can see the red arrow. You had $60,000 in the most productive moment of your portfolio, and in one moment the worst result that you had was $7,000. So maximum drawdown is value between $16,000 and $7,000, and it's a $9,000. So this is the maximum drawdown. Please remember, because later, now and in the future videos, we're talking about a lot about maximum drawdown, because maximum drawdown is the most important thing in trading when we use any kind of criteria to measure trading performance. So please remember this: maximum drawdown, that maximum distance, maximum peak and minimal peak, and you just find the maximum distance. And on the end, just to know what is the relative drawdown. Relative drawdown, just you need to understand, it's a percentage of your maximum drawdown. So you see your maximum value was $16,000, and you know that the maximum drawdown value was $9,000. Equity peak was $16,000, and that difference between that ratio from that two numbers is 56.25%. And this is the relative drawdown. Just relative drawdown is not so important. We can see in some statement reports, in everything. It's good to know. It's just another thing to represent maximum drawdown. But for now and in the future, please always think about maximum drawdown as one of the most important criteria that we will have. Let me present practical example. Here we have one trader from HF Copy, for example. It's a platform that people can copy signals, etc., etc. And we just talk about drawdown. Here we have a 44% drawdown. It's a huge drawdown. And the people can see this trader and this portfolio. Somebody will tell, oh, this is okay. Look, in 2019, it was 300%, and in 2020, it was a 40%. It's very, very good. But actually, it's not. This is you can create a mistake if you follow this kind of trader. Please, I apologize because I don't want to talk about I don't know trader, I don't know anything about him, I didn't show the system here. I just want to show how this drawdown can be very bad for traders. Now, I just presented how that looks. Now we'll go another trader. We saw this portfolio. Another trader, Zulu Trade. When you see, it's a wonderful. First, when you see $1 million. People follow this trader and copy signals. Right now, $1 million. Can you believe $1 million? It's a huge amount of money for Forex signaling in this stage. And we can see that this trader created 43,000 pips. Let me say 1 pip, $1, just to talk in that way. And right now, he has around 1,800 pips negative positions. Maximum open trade 25. And when we look about the drawdown, what's the most important thing, it's around 7,000 pips. Let me talk about $7,000. Somebody will tell, oh, well, it's not big deal because we have a $40,000 profit and only $7,000 pips as a drawdown. And people think that the drawdown is not huge. And when we see this profit chart and performance chart, it looks okay. But in reality, let me see what can be for you as a trader this kind of drawdown. Look this. I'm right now in a PowerPoint presentation, and we are looking for just these numbers. So what we have, maximum drawdown 7K, average profit per month is around $1,500. I suggest 1 pip is $1. And what we need to do practically when we see some portfolio, I will tell you just in the simplest way what you can do. For example, I work for some prop companies before, and right now I work. You can have maximum drawdown 5%. Somebody will give you maybe 10%, but this is it. Of course, we manage a lot of money, it's okay, but 5% is maximum drawdown. So what you can do to trade like a guy from prop company? You see, maximum drawdown is 7K. Using the maximum drawdown, you can calculate what is the equity that you need to have if you want to have performance like this trader. So we will calculate, and it is $140,000. It's a 20 times bigger amount of money because 7K is a 5%. So you need to have $140,000 if you want to trade and have maximum drawdown $7,000. If your average profit per month $1,500, it's a monthly profit 1%. So if you a trader and you invest money in such portfolio like we saw a few minutes ago, you will have only 1% profit per month. And on the end of the year, maybe you will have 10, 12, 13, 14% at most. It's good. It's not bad. This is the reason why a lot of people track this trader at Zulu Trade. But I just want to tell you that using drawdown, you can see and calculate everything and see your expectation. Because I know that a lot of traders in this industry deposit $1,000. And you need to understand, if you follow some system whole year, on the end of the year you have maybe $100. You will not double your account. You will not do that you expect. And this is trading. The best trader in my company will have 20% on the end of the year, and he or she will be the best. This is trading. And you need to understand to calculate risk and to see your risk. Of course, maybe 5% is too small for maximum drawdown. Put 10%. 10%. So, if you want to trade like this trader, your equity should be $70,000. And your monthly profit in this way will be 2%. But this is it. This is your expectation if you follow this kind of system. The biggest problem is that people see gains and profit and forget drawdown. But the drawdown is very important. So I just want another time to tell you again, remember, maximum drawdown in trading is very important. It's your risk, it's everything, and you need always to calculate to know what is your maximum drawdown, what is your equity, what was your initial investment. And only that, when you know those couple things, you can feel the market and you will know what to expect on the end of the year. Thank you a lot. Bye-bye.